This is how to approach Project 1. As you can see, the link here, Morningstar, is going to talk about corporate bond ratings. And a couple of things we want to do is we want to look at the maturity dates of the outstanding bonds, the amount, and the yield to maturity. So, what we're going to do is go to morningstar.com, and here are the bond ratings right here. The company I selected was Advanced Micro Devices. So again, what you're going to do is when you go here, you're going to open in a new window, and then you pick any company you want. Just give me a second here. That for some reason this window's been operating very slowly. This website. One moment, please. And this is the website right here. So I picked Advanced Micro Devices, and you can pick any company you want. It's a very long list of companies. And what this is a list of all the companies, their credit ratings. So they went on Advanced Micro Devices. And this right here talks about the capital structure of the corporation, the amount of outstanding credit rating. Morningstar credit rating is a B. The amount outstanding is $7.8 billion. Technology sector. And this gives a debt to equity ratio right here. So as you can see, debt looks like it's been increasing, and equity has been decreasing. However, that was as of December 13th. It looks like as of March, some interesting things happened. So what we want to do, and the reason why I say that is because there's a lot of equity, whereas there's a little bit of debt outstanding right now. So now we get into the yield to maturity. The yield to maturity is on this column right here. See the maturity dates, 15, 2019, and so on and so forth. The first thing you're going to notice is the coupon rate. As the dates go out further in time, the coupon rate goes higher and higher. The reason why is because as you borrow more money, remember the components of an interest rate, as you borrow further out into the future, there's a higher risk that you're going to default, and also investors need to be compensated for the risk of inflation. That's why as you notice the maturity dates going out further, the coupon rate goes up. So as you can see, none of these are callable bonds. This is the yield to maturity right here. It goes all the way down. And here it is right here. I hit maturity date, and it sorts it in order. And this is a clear mark as far as coupon, the coupon rate going up and up as the maturity dates go out further. So what you're trying to do here is you get the maturity dates, outstanding bonds, the total amount, and the yield to maturity. So now we want the total amount we have outstanding. We just had was $7.8 billion. And if you add up all these amounts right here, you'll probably get $7.8 billion. Now what you want to do is you want to go to the 10K of your chosen company and explain how the bonds are reflected on their balance sheet. All you're doing is you're writing a 1 to 2 page paper just explaining the breakdown of outstanding bonds, you give an idea of, where, what the credit rating is, what the maturity rates are, what the yields are, and then talk about what that looks like on the balance sheet. So to find this on the balance sheet, what we're doing here is, this is easier than going to the SEC website, the Securities Exchange Commission. I just put an AMD, again, that's the symbol that we got right here, AMD, and I put that in the symbol right up. Again, I just typed in AMD, and then you just Yahoo Finance. And then we want to look for SEC filings. We're going to go to SEC filings right here. So we go down to SEC filings. And what we're looking for is the 10K. The 10K is the annual report right here. And you want to get Form 10K. Now, there's a couple of tricks to navigating through a 10K. I know all of you have seen this before. Those of you who have taken my class in Accounting 1, you have seen it. This is the table of contents right here, the front page. And what you want to go to is financial statements. Selected financial data. Okay. This is the income statement. Now, as you can imagine, or as you should know, I should say, the bond information is going to be reflected in two areas. One, on the balance sheet, because it's a liability, long-term liability. Let's just do it within the next year, then it's short-term. Secondly, there's a portion of the financial statements, the 10K, called the footnotes, and we're going to examine that. So what we're looking at here, that was the small income statement, and we are looking for the balance sheet. One second while I hunt this down. Financial statements. Consolidated balance sheet. There we go. This is the year-over-year comparison. It's a 12/31 year end, 2012, 2013. Open this up for you so you can see all of it. Okay. You see the assets, and then you see the long-term liabilities. Now what we want to do is we want to look at, then it says see accompanying notes to consolidated financial statements. we're going to go into the footnotes. And we're going to see, here are the notes. Notes to consolidated financial statements. Note 2 talks about summary of significant accounting operation policies. And we are looking for notes regarding how they're carrying the bonds. This is acquisitions, talks about they acquired C Micro, privately held company. They paid for it. They paid $312 million for it. FYI, for your information, goodwill and acquired intangible assets. We talked about intangible assets over a week or two ago, and this is how they're carrying it on their initial goodwill due to C Micro acquisition. This is how they carry it on their they're carrying it on their balance sheet. Financial instruments. Debt, here we are. Turns out it was in note 11. The company's total debt as of December 28, 2013, talks about the year-end debt. Now remember, this right here is in real time. This is as of March 2014 probably, or maybe even more recent. But right now we're looking at as of 2013. And as you can see, they have a lot of 6% notes, 8.125, 7.75. So we want to look at 6, 7.5, 7.75, and 8.125. And then you can see here are the notes talking about it. Do you remember we talked earlier about that looks like they increased their equity position? It says in 2013 the company repurchased $50 million in principal amounts of the 6% notes in the open market. So it talks about how they repurchased it. So let's look just to see if we're going in the right direction here, if we have the right information. So 6%, 7.5, 7.75, 8.125. And that's the, and then we're going back to Edgar. And this is the breakdown right here, coupon. 6, 7.25, I saw that here somewhere. We got 6% coupon rate, and we got 7.5. I see 8.125 over here as well. 8.125. So the only thing I don't see is 7.5. I see 7.75. So the coupon rates match up to what's on the SEC